This is the Good Neighbor Podcast, the place where local businesses and neighbors come together. Here's your host, Jeremy Wolf.
Hello, everybody. We're back with another episode of the Good Neighbor Podcast. Your host, Jeremy Wolf, of course. And tell you what, I am taking out a loan today. What am I borrowing, you may ask? Well, knowledge, of course, from our next guest, Shannon Young. Shannon joins us from Fairway Independent Mortgage Corp. Actually had Michael Cuniff, who is the director of marketing over at Fairway, on the podcast like a month or two back. And he said, you know what, you should get Shannon on to talk a little bit about what he does. So here we are. We have him not in the flesh, technically, because we're doing this virtually, but he's here nonetheless. Shannon, welcome to the show, brother.
Hey, thank you so much, Jeremy. Thanks for having me on.
Hey, pleasure is all ours. And thanks, as always, to our listeners for tuning in. And yeah, so let's get into this. Tell us a little bit about what you do. I know when I spoke to Michael, we talked a little bit about Fairway, and he also talked about what he does on the marketing side. Tell us a little bit about what you do as a broker over at Fairway.
Yeah, so basically, I'm a mortgage loan originator. I originate, all types of residential loans, FHA, VA, conventional, that kind of stuff. Do primary residences, investment properties, that kind of stuff. So I'm really, really hands-on and direct with the clients.
Okay. So you got to tell me, what is going on with mortgages right now? I've been out of the game for some time now. I haven't taken out a loan for a property in a while. I know we're coming off the heels of a crazy real estate market. Interest rates are starting to come down a little bit. What's going on right now in the market?
So they're always going to tell you, I'll say two things about the market. Number one, the only thing that ever stays the same is that everything changes. We haven't seen what's quote unquote a normal market probably since I've been in this industry, and that's been 22 years. So ultimately, but what's going on right now is this: listings are sitting on the market longer than they ever have. 30, 60, 90 days for some houses. There's some fear in regards to, what do I do? Prices are high, rates are high, insurance is high, taxes are high. But there's a lot of fear in the market. However, this market right now is about as close to a buyer's market as we have seen probably in the last 7 years, and that we will see going forward for the next 10.
Why is that?
Because right now let's go back to 2022. 2022, people were commanding their price. People were paying $100,000 over appraised value, all sorts of contingencies that were all waived, and it was literally the wild, wild west.
Fire sale time.
It was fire sale, and everybody was paying ridiculous amounts for properties. Well, after that, interest rates went up. Let's call that what it is. I mean, they doubled in the course of 12 months, but interest rates had to go up to combat inflation. They had to, because you can't keep selling at a 2% rate and have prices go up exponentially, because then prices will end up being too expensive, even though the rate's good. So what went up must come down. So we've seen a little bit of a reprieve in pricing. Now, are we seeing 20% gains year over year? No, but we weren't supposed to see that anyway. So we're in this pocket where rates have come down a little, but prices have actually remained, either stagnant, or in some markets, they've actually started reducing their prices. So this is really a time to get in, because when interest rates drop, and when the market gets word that interest rates, are dropping, it's like a pool party. Everybody jumps in at the same time. So when the demand comes back, sellers are going to be less likely to negotiate on price, less likely to negotiate on credits, less likely to have contingencies of you selling your home. So this literally is going to be as good of a market as it potentially could be in the next 5 to 7 years. So the time to act on something is absolutely now.
I like the sound of it. You're getting me excited, Shannon, ready to get out there and buy some more properties. And obviously with an election year, there's a lot of political uncertainty, and depending on who gets into office, that'll obviously have a large impact on interest rates moving forward. But yeah, that's the general feel I got. At least I'm kind of detached from it, but yeah, it seems like it's getting to be a little bit better of a time. There are like more foreclosures starting to come back now, no? Or more?
Not really. I actually just saw an article and I forgot where I saw it, but foreclosures have actually remained pretty consistent, and they remain consistently low. But to that piece of it, here's what has risen sharply. It's credit card debt.
Everybody bought the new houses and then they had to jack up the credit cards to fix them up.
Well, they not only that is they bought their house when rates were at 2% and 3%. And the conception is that, I'm literally locked to this rate. I'm married to this rate. I can't get out of this rate because I don't want to ever leave it because I'll never get it again. However, you have a lot of buyers, a lot of homeowners, I should say, that are in a 2% rate that are paying 35% on credit cards at the tune of $100,000. So this is really the time where I'm actually marketing this and telling people, like, forget your 2% rate, forget your 3% rate, get your credit cards paid off, save your credit, reduce your monthly obligations by up to thousands of dollars a month. Because at the end of the day, if you can, let's say you do a cash out refinance on your home, pay off all your credit card debt, save $1,000 a month on your payments, you're not going to care what your rate is. You're not going to care really that your rate went up.
No, because the net rate for everything you're borrowing money against is going to be lower.
100%. Yeah. So, I mean, and I actually have tools and I show customers this, like I actually have a blended rate tool, which I do actually show customers and say, okay, let's look at your $300,000 mortgage at 3%. Now let's look at your $100,000 in credit cards at 30%. And they're going to see that they're, when they see what they're actually paying, it is an eye opener because is, I mean, and what they're actually saving on a monthly basis. And that is really that's really where the proof of the pudding is, because this is, people don't realize that, hey, I can get off this mortgage rate. I don't have to be locked into it. We're in the middle of kind of cycling out the lowest rates in history. And, it's funny because I get this question all the time, probably get it once a day. Are we ever going to see these rates again? Honestly, no idea. But my rebuttal to that is, look what had to happen to get there.
Yeah.
The world shut down. Well, if the world shuts down again, it's possible. Right. Well, it's possible. 100%.
Yeah.
But we don't know. I mean, we don't know. But you can't live for the future. You have to kind of live for the now.
Absolutely. And so that's why it's so important. I say this all the time. I interview tons of people in different industries, whether it's a mortgage broker, a realtor, financial advisor, accountant, whatever it might be. It's so important for people to have a team of professionals that help them with these types of things. There's so many people out there where their finances are just in complete arrears. They're just a complete mess, and you don't have a good picture of what's going on. You know what's coming in, what's going out. And it's important for you to, as a mortgage consultant, to sit down and do that analysis and help people understand where they're at with their finances. So it's so unbelievably important to do that. It's something that I've learned throughout my journey at 44 years old. It took me a while to get there, but I'm getting there. I'm not there yet. I'm getting there.
Same. And to piggyback on that, it's even if you don't, I'll give you a big misconception about like a refinance, right?
What do you got for me, Shannon?
So a refinance, when somebody says, oh, well, let's talk about refinancing your home, they automatically think, oh my God, I'm locked into this. I'm locked into this new mortgage. I'm not ready. I'm not this. I'm not that, right? Refinancing, you don't have to do, like, I'll just say this point blank. You don't actually have to do anything. You already own the house. Make your payments. You don't ever have to do anything again. However, the proposal of a refinance is sitting down and making sure numbers work. If numbers work, we move to step 2. If numbers work, if that works, we go to step 3. You're not locked into anything unless you choose to move forward. So a refinance has to make sense at the time you want to do it. If it doesn't make sense, you don't do it. And there's plenty of people I talk to where it absolutely doesn't make sense, or they need to do like a debt consolidation or a home equity line of credit because that might make more sense than paying closing costs and giving up that rate. But you don't know unless you actually go through the application process and kind of figure out, okay, here's where I stand. Now, is the savings going to be enough to offset what I'm going to pay? And if it is, great, we move forward. If it doesn't, then you don't.
Absolutely. Right. When's the right time to buy a house? Ask realtors that all the time. They say the right time to buy a house is when you find the right house or the right property and the numbers work. It's the right time. You can't time any of this stuff, right? You got to look at your situation, do a full analysis of where you're at, and just make the best decision possible. And that's it. That's all you
Correct. Can do. And don't try to time the market. Don't try to time the market.
I'm so bad.
Don't try to time the market. Like that
it'll make you go crazy, right? Emotionally speaking.
It really will, because I can tell you unless you literally have like a phone number to the or phone number to the Federal Reserve to know what they're doing, which a lot of them may or may not know what they're doing anyway. But if you know, unless you really have a tune into the market, a lot of the data you're getting, right? A lot of the data you're getting is late. It's about a week or two late. So what I love about this business is, I got this text this morning from a borrower. I literally got it. Federal Reserve is meeting at 2:30 today. Rates should be dropping. Well, that's what you're seeing on Yahoo. That's what you're seeing on Yahoo News, and you're seeing on all of the news outlets, and you're seeing that because the Fed is meeting today. That is true. Here's the difference. The Fed is not expected to drop rates today. Now, if they do, great. But the market, Wall Street's not anticipating that. Wall Street's anticipating that the Fed's going to reduce rates in September. However, the market and everybody that sets mortgage rates, Fannie, Freddie, FHA, everybody sets rates, has already built that into the rate you're seeing today. So they're already accounting for that, because they've already done the market analysis to know what's coming in September, to know, okay, if the Fed doesn't cut rates today, but they say they're going to cut in September, your rate today is already built in for that information. Yeah. So that's why playing the market can either, it's almost like kind of going in and not knowing how to play roulette, throwing your money down on a number and hoping for the best. You got a 1 in 38 chance?
Yeah, that's what it feels like. I learned my lesson the hard way. I dabbled with some crypto. Actually, nothing phases me anymore after playing with crypto. But one thing I did learn is that I just defer to the experts on this investing stuff, because I'm too emotionally pegged to all of this. So I watch it in the background, but I don't try to pretend like I know what I'm doing. I just work with professionals that actually know what they're doing, because that's the best thing for my pocketbook. That's what I found anyway.
100%. And honestly, and when it comes to buying a home, this is one of your 4 basic needs. So it is an extremely emotional process. Oh yeah. You don't want to try to time, trying to time the largest investment you may make in your life. You don't want to try to time that into the market, because literally there's only one time in US history of everybody ever owning a home in their entire lives, in the entire United States, where values have declined. So it's literally the most stable investment you can make. But real estate also has never been designed to be a get rich quick scheme. It's a long game. It's 100% a long game. So, if you bought your house in 2007 and you still own it, and as long as it's worth more today than what it was worth in 2007, you made money.
Yeah, and as long as if it's an investment property or rental property, as long as you can find sustainable tenants for the property and make some income throughout that process, over a long enough period of time, the equity is going to be there, and it's just a good way to diversify your portfolio. I want to go back. You said 22 years you've been in this business, right?
Yep. Since 2002.
So that must have been like right out of school then. You don't look that old.
Yeah. I kind of fell into it, to be honest with you. I had gotten a job out of college, and I won't say the name of the company. I only lasted like 3 months. And a friend of mine at the time said, "Hey, why don't you come? I just got this job at a bank." And I was 22 at the time. So I said, you know what, great, sure, why not? And he, what sold me on the job at the bank was I got 3 weeks paid vacation a year and all the holidays. I'm not even kidding. Like at 22 years old, these are the decisions that I made. This is what was important to me at the time. But I kind of fell into it, because during the first refinance boom back in 02, late 02, early 03, there was a huge refinance boom in the market. And
was that the start of all the stated income loans and the no money down and all that? Was that when that originated?
It was just before that. Before that. So the origination, all of the stated income stuff and all that stuff was to keep everything going, because back at that time, rates were 8.5. When I got into the business, rates were 8.5.
Were they really? See, everybody forgets. Yes. We always forget, right?
Yes.
It's not that bad now, guys.
No, and I'm not going back even to the to 1990s.
Yeah, there was times where it was like 18% rates back in the day or something crazy, right?
Yeah, absolutely.
Yeah.
Oh yeah. I mean, an 8.5 was good rate.
Is important.
Oh yeah. And what the market did is the market decided they wanted to make housing more affordable. And there was a recession that was supposed to be coming. They wanted to stop the recession. So they pushed all their chips in the middle and said, we're going all in on housing. So in 6 months, rates went from like 8.5 to 4.5. It was one of the largest drops we've seen. It created this huge refinance boom. Values went up. Everybody's refinancing. People would refinance to 6% and then turn around and refinance 6 months later to 4%. So at the time, the bank I was working at decided this. They said, okay, to help demand, we're going to allow personal bankers in the branch, like the person you go to see for customer service, we're going to allow them to originate loans.
Oof.
Yeah.
What could go wrong?
Yeah, right. So I happened so it was kind of like forced on me because we were working at the time, but I happened to get good at it and then realized, okay, well, you can kind of make some money doing this. And, and then literally 05 came, and that's when the stated income loans all came, and they kept all that going. And then, and then 08 happened, and, it's as good as it was, the rug got pulled out from under us.
Indeed, it did. Well, let's let that be a lesson, everyone out there making policy. Don't artificially tweak the system too much, because it always has ramifications beyond our, what's the word I'm looking for? I don't know what it is. Well, we'll skip from there. Okay. So Fairway, you did this. Fairway. How did you link with Fairway? What's the backstory behind Fairway?
So I've actually, I have a teammate, my team leader. I've known him for 15 years. We used to work together at a different company, and I've actually been talking with them on and off for probably the last 6 years. I was with another company. I was top producer at another company, and we've been talking, kind of going back and forth, and they kept telling me how great Fairway was, how great operations and the process and the competitiveness and the resources and the technology and the tools and everything. At the time, and I just kept, I kept staying where I was at. It was really more of a complacency and a comfortability standpoint. But in November of last year, I decided, I said, you know what, it's time for a change. I need to make a move. So I made the move to Fairway back in late November, just after Thanksgiving of last year. And in all honesty, it is literally the best move I have ever made. It's the best company I've worked for. It is hands down, just from it's hard to articulate to like a borrower, or especially like a first-time home buyer who doesn't really know the process, how great things are. But from an originator standpoint, the company that you're with says everything about you as an originator and how well you articulate and portray that customer service. Because ever since, it's like I feel like I've been reborn coming to Fairway. In all honesty,
bold word, Shannon.
It is, but I feel reborn, because the energy and the drive and the passion has come back to the forefront, because in all honesty, how easy it has been for my customers, how easy it has been for me as an originator to get things done. And it's important to work for a company that has a can-do attitude. And this company, the reason why they win J.D. Power awards for service, and I mean, it's just they want to find a way. So, and that aligns with my goals, because I'm always going to try to find a way to make something work. We're going to look for something. We're going to do something like, that's the dream. Homeownership's the dream. So we want to make it a reality.
So what is it about Fairway's model, and talk a little bit more about that, if you could, that makes it different from other mortgage lenders out there? I know that from speaking to Michael on the podcast, he talked a little bit about this, but for our listeners that didn't hear that, tell us a little bit about the Fairway model, because I know there are quite a few agents through Fairway throughout the country. Mm-hmm. How is it set up? How is it structured? How is it different from your standard, like run of the mill, I guess, mortgage process or mortgage company?
So there's two things I'll address, and these are very, very important for listeners, realtors. I mean, it's really important to understand is, obviously getting a mortgage is hard. Buying a home is hard. This is not an easy thing to do. There's rules that, we're governed by laws, we're governed by all sorts of stuff, right? However, every lender in the world has the same set of rules that are set by VA, FHA, Fannie, Freddie. Everybody's got to play in that sandbox, right? But what a lot of people don't realize is there's a lot of lenders that will add additional their own rules called overlays to the regular rules, consequently making it harder for a borrower to qualify.
Oh joy!
And yay, yeah, like as if the job wasn't hard enough. So it's just a whole nother set of level of rules that isn't known, and these things you don't really know until you're 2 or 3 weeks into the process. Yeah. And then all this stuff is getting asked for, and we're asking for documents again and again and again. And I provided those. Well, those didn't work. Well, nobody told me. Like, these are where a lot of the stuff unravels. Plus, you have different what they call turn times. And I experienced this with some of the other companies I've worked with is, hey, we're ready to close. Okay, well, now we need 3 days to review everything to make sure, that the closing package gets to the title company on time. Well, this is closing tomorrow. Well, our turnaround time is 3 days, and we're not going to come off of that time frame. At Fairway, none of that happens. None of that happens. Like, I have literally, since coming here, and like I said, I've really started kind of closing loans in December, so I've got about an 8-month snapshot. I've got 40 5-star reviews already. Oh, nice. And the proof is in the pudding. And when I looked at the reviews, the messages were always consistent. The team handled all my questions and concerns. The team, they moved so fast. One of our core values here at Fairway is speed. It's speed to respond. And look, I wish I could tell you, but I wish I could tell you as a borrower and as a realtor, I wish I could tell you your process is going to be perfect. It just isn't. Things are going to happen. However, I've never seen a greater response to adversity or adaptability than I have seen here at Fairway. And that's just, it's bar none, head and shoulders above anywhere else I've been in my 22-year career.
Very good, man. So for our listeners out there that are in a position where maybe they fit that bill where they have a low mortgage interest rate, but they have a lot of credit card debt, or they're looking to get more information, how can they reach you? What's the best way to learn more about what you do, Shannon?
Yeah, absolutely. My direct phone number is 954-369-6171. That's my cell. It rings to me. Call, text, email. I'm here to answer questions. I built my business on the fact that I'm going to be a resource first. I'm going to be a wealth of information first. I built my career based on honesty. I'm going to tell you if it's a good deal. I'm going to tell you if it's not. I'm going to tell you if it's right for you. If it's not, then we're not going to go down that road. But they can call me at 954-369-6171, or you can email me at Shannon, that's SHANNON .Young, YOUNG, at fairwaymc.com. That's Shannon.Young at fairwaymc.com.
Don't worry, folks, if you missed that, We'll throw a link in the description below to all of his contact information. Shannon, it was a pleasure getting the opportunity to meet you and learn a little bit about what you do. I enjoyed this, brother. So thanks for joining us today.
Thank you so much for having me on, Jeremy. It's been a pleasure.
All right. And thanks to our listeners for tuning in. And we will catch everyone next time on the next episode of the Good Neighbor Podcast. Everybody take care. Have a wonderful day and stay blessed. Take care.
Take care, guys.
Thanks for listening to the Good Neighbor Podcast, Cooper City. To nominate your favorite local business to be featured on the show, go to gnpcoopercity.com. That's gnpcoopercity.com or call 954-231-3170.